The markets managed a last-minute reversal on April 7th to keep their 5-day winning streak alive. The S&P 500 and NASDAQ both saw a late-session relief rebound as Pakistan requested a 2-week extension on the U.S. Iran deadline. This move effectively starts a 14-day countdown for investors to monitor these cooling tensions. While it is only a temporary reprieve, it was enough to flip the script on the heavy volatility we saw earlier in the session. The market's direction changed sharply after Pakistan's Prime Minister requested a 14-day extension to the U.S. Iran deadline, allowing for conditional passage through the Strait of Hormuz. This shift helped stocks recover from an early 1.2% loss as the immediate war scenario faded. Nana describes this as a conditional reprieve rather than a settlement, noting that military options remain on the table if tensions flare up again. That intraday reversal saw the S&P 500 bounce off the 6,300 level, which had been flagged as a critical war scenario floor. By the close, the early 1.2% loss had shifted into a marginal gain. Sunny observes that this underlying technical strength is allowing the market to look through the worst of the headlines and preserve its recent winning momentum. In the healthcare sector, United Health and CVS surged today following a significant regulatory update. The agency announced 2027 Medicare Advantage rate policies that managed to top the market's pessimistic expectations, providing a much-needed catalyst for these managed care leaders. Sunny views this newfound clarity as a tactical support level for major insurers. It represents a pivot from the government pressure that's hampered the group lately. On a wider scale, the recovery in these heavyweights gave the main benchmarks a helpful lift as the session closed. Semiconductors saw a boost today after Broadcom confirmed a deal to supply Google TPU chips to Anthropic through 2031. According to Nana, the agreement provides multi-year revenue visibility and establishes a credible alternative to NVIDIA in the custom AI silicon market. Microsoft is currently weathering some sentiment pressure from OpenAI's projected $115 billion cash burn. However, Daniel Pronk notes that Microsoft's internal cloud demand is actually outstripping its current capacity. This persistent deficit suggests fundamental business strength that outweighs the noise surrounding its high-profile partner. The macro backdrop is shifting as U.S. oil futures broke out to new highs at $115. Analysis from 42 Macro suggests the market has transitioned into a realized inflation regime driven by supply-side pressures in energy and metals. With that transition underway, Cleveland Fed nowcasts suggest a sharp bounce in consumer prices as March projections climb toward 3.4%. Sunny argues that this supply-driven setup makes standard rate hikes less effective. Ultimately, this places a structural cap on equity valuations, a ceiling that holds firm even as geopolitical tensions show signs of easing. Moving to our stock radar, Mastercard is currently trading near its 2022 valuation lows. This level comes despite 18% revenue growth, which Daniel Pronk identifies as a potential value floor. Apple also saw early session weakness following reports of technical delays for its foldable iPhone. These setbacks are expected to push production back several months. Switching to Tesla, Sunny points to $320 as key support. A deeper downside floor exists between $260 and $280. These price zones provide a tactical map for handling positions in today's volatile climate. Physical shortages are starting to surface in East Asian markets as the Hormuz blockade triggers a broader supply chain contagion. Analysts at Forward Guidance see this as more than a temporary disruption. They argue it is accelerating a structural shift toward deglobalization and localized trade. On the technical side, the NASDAQ is currently testing its daily 20 moving average. A failure to hold this level could spark negative gamma and fresh selling flows, making the 404 level on the semiconductor ETF a critical pivot point to watch. The latest geopolitical reprieve gives markets a tactical window, but structural inflation is still a persistent cap on valuations. We're watching the NASDAQ's 20 moving average and Friday's CPI print for the next regime validation. All our sources are in the description below. Subscribe for your daily updates.